Welcome to the It Takes a Village podcast by Village Bank, where we bring leaders with expertise in finance, accounting, entrepreneurship, leadership, and branding into our village to help entrepreneurs like you in our community. As an entrepreneur's bank, we hear all the time that you want to know more about the financial nuances of starting and running a business. These questions are profoundly important and can be incredibly stressful. That's why we're inviting prominent leaders and friends of our village to weigh in and build a village of answers and connections on the It Takes a Village podcast. Thank you for joining us. Today we're talking to John Dierkhising, co-owner of Bottom Line Accounting, about cash flow and how to better understand the sources and uses of your business's cash during the current COVID-19 pandemic. This episode was recorded during a live webinar event.
I'm bringing John into this group, and he's got a skill set that I think is so valuable to a group like this. And so when we talk about financials, and we talk about what are you going to do with cash flow today, and what your sources and uses are, and how are you going to find business today, how are you going to create business today, what that model is going to look like in the future. I can help a lot with from a banking perspective or what I see other industries doing. But I think I wanted to bring a friend with me today and talk with John about what does that look like just from a pure financial perspective. What is he seeing in industries, and what is he looking at? What are his clients doing? I wanted to invite him today too, because I think I found a lot of value in talking to him about different industries. And he's got a couple cool tricks up his sleeve that he's done with different businesses, from startup to mature businesses around R&D and how to get some tax credits back for that. So I thought that might be interesting for him to discuss today as well, and what that could potentially look like for your businesses too.
Thanks for the invite. I think, a lot of the topics that were sent out today, this is going to be really relevant timing for some of this. So I know we're seeing it across the board with our clients. Cash flow is going to be a huge important aspect of especially small businesses here in the next 30, 60 days. So I'm looking forward to seeing some of Alicia's talking points here.
Thanks, John. So Alicia, what are some of the products business owners should consider to help with cash flow needs right now?
So anyone that's has like online banking today, which most banks have an online banking product, you have a bill pay product, and then you have QuickBooks. Most online banking today connects to QuickBooks, and you can get those links. And so you'll get that automatic payment into your account. And then when you're working with a bookkeeper or you're giving everything to your accountant, they'll cycle right through. You don't have to do the extra work.
We had a question on what are the sources and uses of my cash, and should I be reevaluating those?
We're a bank, but we're a business. We're a business, and we have to look at our sources and uses of cash the same way that Mickey's going to look at it, and you're going to look at it, and Julie's looking at her business right now. I see Candace on here the same way Candace looks at her business. And I think what's really important is to do that forecasting and be conservative in the forecasting model, but also look at you, even though you wear the hat of CEO or president or owner, you can't be an expert at everything. And so what we'll see people pull marketing right away, or pull a bookkeeper right away, or pull management, leadership, training, or there's things that you've got to keep in place. So you have an industry expert that's sharing with you what other businesses are doing, because you don't know, right? And some of the best ideas I've ever had in business, or I've looked at expenses differently, has been through others that have a lot of experiences with different banks in the industry, right? I hope that makes sense. And so where I'm going with that is that if you want to survive during this time, it might not be pulling a sales staff or pulling marketing. It might be actually doubling down and saying, what is the community telling me they need right now?
Professional services, you're just naturally going to have a couple of points she brought up right away. She naturally just doesn't have like the overhead that maybe some types of business would have, like say distribution, inventory, or manufacturing, things like that. But the one thing in a professional service industry like she's got is right now you're fine because you've got just naturally 3 months of backlog that you can work through, that you've been turning month over month over month. But now we're hitting this kind of gap here where they're going to be able to work through their backlog. And then the worry is at the end of at the end of this kind of stretch, if you're not filling that backlog, that's where they're going to feel it. Then the only other worry would probably be the receivable side. They got work to do. They're doing the work. They're maintaining stuff internally. But then again, just like Mickey, the customers might not be able to pay, let's just assume, or whatever. So those are a couple of things I'd be looking at in their case. Other clients are feeling the same. They're, I've got a kind of a solar array type company, and they've got a ton of work right now. But it's once they work through that, if they're not filling that back up, the owner's going to be worried. He's going to have a lot of employees just standing around worrying what to do next. So just kind of maintaining that WIP or that backlog, kind of focusing on that, and trying to increase that so that you don't hit it in a couple months or however long this ends or goes on for. So
cash is different than profit. I always think of revenue, top line revenue is different than bottom line income. And it was interesting, before this, I was talking to two women who I met at Julie's place and at Modern Well, and they said, hey, I think we're going to be starting something here. And they are. They're going to start something very, very fascinating. Very interesting. They got tons of experience in their industries. And one thing that they had shared with me was they said, well, the company had 4 million of revenue last year. And I said, okay. I'm like, that's revenue. What did it make? Well, it didn't make money. Okay, well, that's different. And so I don't care if it's 40 million. I don't care if it's 4 million. We love to talk about our sales. We love to talk about how big our loans are. We love, we're bankers. We talk big numbers and millions and billions of dollars. But at the end of the day, guys, I always talk about sources and uses. We talk about it at home, quite frankly, that it's what are my sources of cash? How am I bringing money in? And do I have enough different ways that I can bring money in? So like if we're thinking of advertising, am I only working with attorneys? Am I only working with CPAs? Am I only working with builders? It can be anything. Or do I have a wide variety of people that when something like this happens, some are essential workers and they continue to have cash flow and others aren't and they don't know what they're going to do. That was off the top of my head, but I think that it's so important that we understand the different ways that we bring in money and then the different ways that money goes out. What's a different way that cash could go out, or if there's a different way to pay that bill or to pay it slower or to have less of that expense right now. Got to figure out how you get your cash in faster. You got to figure out how it goes out slower. I mean, liquidity, you've got to be able to have access to cash. And I'm part of a WPO group, and that was the conversation. Get a HELOC if you have equity in your home right now. Doesn't mean you have to use it, but it means you have access to it. Because some of the ladies were asking about, oh, do we shut down this line or should I shut down this credit card? I said, absolutely not. Keep access. I'm not saying use it. I'm saying keep access to it, because that's where if, something hits the fan or an opportunity comes up, right? Because this market's full of opportunities.
Everybody else should maybe look at this for their Marches. You might want to start including, instead of just a balance sheet and income statement at the end of the month, have your bookkeeper or yourself, if you're using like a QuickBooks or a Peachtree or Sage, you grab the cash flow statement, because that will at least tell you, the beginning, it will start off with your monthly net income if you're in positive, and then it will show you where it will kind of convert your accrual net income, or if you're on a cash basis net income, and it will show you where other things that aren't on your income statement are going. So in their cases, I got another client that I know they do $15,000 a month in loan payments. So at the end of the month, they have, and I do their statements on cash because they don't have receivables or payables. So at the end of the month, they need to, the owner, I tell her she needs to have, above a $15,000 net income if she wants to, not deplete her cash basis. So, or cash reserves. So that's just kind of a number she focuses on, when she first looks at an income statement. The point is you just got to kind of know what's in there, those numbers.
You mentioned vendor terms to pay bills a little bit slower. Can you explain that more?
As far as Alicia's point on vendor terms, you know, I know I've had a client just, you know, in the past week tell me that one of their bigger vendors allowed them to, if they were current with previous payables, to allow them to start stretching out new business or new payables. So that's something you guys might want to look into if you've got a pretty good established vendor that you've been really good about it with a payment history and you're currently current, then maybe see if there is some flexibility in this case. In this case, this vendor is a very large business. So my customer is not, they're small, but this vendor had some flexibility there. So it was encouraging them to go look for new business and not have to kind of worry about that, you know, cash necessarily right now. So.
What about on the other side of that, when you have customers asking if they can delay payments?
I mean, if it's a significant debt, then yeah, we would definitely want to refer that off to a lawyer. But if it's, you know, like a vendor pay or just like a normal customer type receivable, first thing we try to go for is our cost. So we want to try to go back to that customer and say, you know, try to negotiate. They don't need to know your cost, but let's say you're at 50%, you know, cost ratio. So the first thing you just need to do is try to get that back right then and there. See if they can cut a check for at least half, if that's your range. If maybe you're at 65%, maybe at 45, whatever the case may be. Try to cover your costs, and then continue to go back for your profit. So we try to use that when possible, and sometimes it just sits there. I mean, you just send past due notices. You know, every month we'll look through the over 60 days for clients that want us to communicate that. Some maintain that themselves. They don't want us, you know, sending out anything, communication to any customers, but we certainly look at anything over 60 days. It just automatically gets an email with a past due subject line and nothing more than that. I mean, it's just consistently, you know, showing that we're still looking for this payment. And then when you have ability to kind of have those direct conversations, that's where I would start asking for partials, like at least get your profit or your cost back. If it's a product-based thing, you know, maybe you can get them to return the product if it hasn't been consumed or sold or whatever the scenario is there. If it's worth something to get back, things like that. So
Today is a time to be generous, and today is a time to help your neighbor. And if you can, and if communication is open, I think that's really, really important. Because I think that everyone is going through this right now. And honestly, at the end of the day, it's a big, you know, the world is a big round circle and it always comes back. And so I think that both of you have really great advice on how do you continue to communicate and how do you continue to help your clients while, you know, saying, I expect it. Let's just talk about what that time frame looks like. Yeah, that's a good point. And then from, of course, because I'm the banker, I say now from the back end, what does that look like, right? And being clear on maybe it is for us 6 month, up to 6 month deferral, or, you know, and then we relook at it and we talk about, is interest going to be owed after 6 months? Is interest owed on the back end of the loan? Do we re-amortize payments? Do we do a balloon payment in 6 months? So there's a lot of different opportunities for you guys to get paid back the same way we get paid back. It's just, we have to have it in loan docs where you guys can maybe come up with something else. But there's lots of ways to say, what does that look like for you and what could work for you?
What are your recommendations for Q1 distributions with the extended tax deadline?
Keep your money as long as you can. I don't think if, you know, there's not a bill coming in the mail saying it has to be due today or else, like, I would keep cash as long as you can. Cash is king. And, you know, the one thing about the administration that we have today, whether you like them, you don't like them, doesn't even matter. At the end of the day, they are pro-business. They are pro-small business. They will, and they're not afraid of debt. So I think that they're really going to do anything and everything that they can do. And it's bipartisan at this point to keep as many people employed. If you're not employed, to keep you from losing your home, to keep you in a place where you can pay your bills, to get us to a place where our kids can go back to school. And so they're going to continue to help banks stay liquid, small businesses stay in business, and keep homeowners in homes. that, I mean, they're going to continue to pour debt in, and a way to help with that is to not make you pay taxes right away, to give you additional tax breaks. I would wait till July. I mean, honestly, that was a conversation when we talk about sources and uses at Village Bank of our own cash. A lot of times we look at it as loans. So our assets and liabilities, which are deposits, the deposits that you're putting in the bank, those are liabilities because we have to pay those back to you. And we looked at that, and generally in April, we'll have a huge dip because everyone's paying taxes. We're not going to have a dip. We're not. And we know that we're going to have a dip in July. And we're actually saying, are we going to have a dip in July? Because they may even extend it then. So I know John has a lot to say about this too, but I would say, Candace, I would hold on to your cash for right now, and just wait to see what plays out. As long as you're not paying a penalty or there's no, interest on it, I would do that.
Yeah, and to Alicia's point, I would agree, definitely agree for anybody else in that same scenario. To be real honest, a lot of our clients don't make quarterly payments. The interest and penalties are so small that they certainly try to catch up by the end of the year. And again, to refresh people on the rules there, the government says, especially on your small business side of it, you have to pay with the safe harbor rule is 90% of your actual taxes owed, or 110% of your previous year. That's really important to kind of understand, especially if you're working with a bookkeeper, that you're just not sending money in based off of the prior year's 110. Most tax professionals that give you the coupons, they'll give you 110% of what you owed the prior year, just to keep you within the safe harbor rule. So a lot of misconceptions can happen there. People make those 4 payments, and then at the end of the year, they owe a ton of money, and they're like, well, what happened? I already paid my tax payments. Well, that has nothing to do with this year's taxes other than the safe harbor rule to avoid any potential penalties or interest on what you were supposed to pay. So it's important to kind of understand on the tax quarterly estimates, they are estimates, but also you got to analyze your year, especially come like October. We'll definitely kind of review the quarter before the after the quarter 3 payment, before any fourth quarter payments go out. We want to make sure, are we in line with the prior year? Are we way ahead? Are we way behind? What kind of adjustments do we need to make, by the end of the year from a tax estimate perspective? So you still have plenty of time. I would not make any estimates right now, and that's just my opinion.
Mm-hmm.
I would definitely agree with Alicia, and just having that general understanding that you can still catch up and be fine. And if you did get hit with a penalty, it would probably be small, and maybe they'll wipe out all the penalties. Who knows?
John, can you speak to the tax credits available for businesses doing research and development?
So R&D is just there's a lot of opportunity there, and it's really underutilized credit. So it's really made up of, people think you need a white lab coat and you need this big facility. It's not that. In this client's case, it's, they're a machine shop, and, every job that they do, they have to kind of figure out for their customer, maybe how to process the parts that they're given. And so there's a little bit of R&D in all these jobs. So we can take that information and come up with a reasonable percentage of maybe pre-production work. So nothing qualifies once you're in production. Nothing qualifies if it's in China or overseas type of things. But the stuff that's pre-production, a lot of times it's like the owner. It's like, we're going to take 80% of your pay or your time, and we're going to apply that towards the R&D credit if they're like really involved with that type of stuff, or the engineering teams and things like that. The other portions of the buckets are, so the big labor portion, which it's, again, you don't have to sit there and have timesheets. We can make a reasonable argument based off a percentage of so-and-so's time. And then there's tooling or consumable things that are related to R&D. We can say, so let's say you have $100,000 in machine consumables in a year. We could say, we can make an argument that 5 or 10% of that is consumed with pre-production R&D work. Or there could be specific R&D jobs that you have to test. R&D tends to follow the risk. So if you have a customer that comes to you and says, I need you to do this machining specifically as we're telling you, well, that's not really R&D for you. That's probably more R&D for them. But if they come to you and say, here's a part, I need this done to it, please do it and figure it out, and you do that, then that's kind of an easy, simple way to think about R&D. So the point is, if there's clients out there that are producing goods, producing software, we had our biggest R&D credit was actually a software company. Things like that might be relevant. There's a lot of opportunity there, and it's all kind of pre-production type stuff.
We're starting to have the conversation around, I know it's a busy time, but it's worth an introduction to say, does any of this make sense? Because like we talked about, sources and uses, and where's your cash going out? And if you can start to eliminate that or reduce that, it makes sense. Even when the pandemic's not going on, I mean, if you're going to be a good steward of your business's financial, you need to look at. How am I going to improve cash flow today? Looking at your accounts receivable, how fast are you getting that cash in? How fast that cash is going out? Is there any way to start to eliminate some expenses that you have today? And as an entrepreneur, I'd suggest that personally and professionally. I think Jamie brought up a good point that, you do have to make some decisions at times. And I'm going to guess almost anyone that's an entrepreneur is going to have to make a decision on what they're going to make at some point and how much cash they want to pull out of the business, whether it's for you have to do it so you don't let someone go, or it's because there's a great opportunity and you want to invest in that opportunity today. And like Jamie said, double down, right? Even though we're saying how fast can you get paid, how much slower can you pay some of your bills, is if you've got really good relationships with some vendors that you can say, listen, I've always paid within 30 days, 60 days. Can I pay within 90 days now? I think that's something to talk about. Again, always call and make sure you got that relationship. We talked about discounts or slow pay for certain vendors. I think there's opportunities both ways there. Making sure you got a line of credit or a loan. And I think a lot of you that have been to most of my conversations, I always say step one, separate personal and professional. Like have your personal checking account, your professional checking account, get a different credit card, like start to separate things. Today, I would actually say if you have room for a HELOC, you might want to apply for a home equity loan. If you have a mortgage today and it's at a really high rate, you may want to look and apply for a new mortgage and see if you can get a lower rate. Refinance. There's other opportunities right now that I'm not suggesting you got to use all that cash and get your home up to 80, 90% loan to value. What I am saying is have it for a rainy day. It's very, very important that you have access to liquidity when you don't need it, because that's when we love to give it to you. When you do need it, we ask you a lot of questions. And I'm sure John can speak to this too.
And I would just add, if you do a HELOC, just make sure, you don't want to necessarily put that on the books per se. You make sure there's a separation there. So let's say you didn't qualify for a business line of credit and you were going to have to rely on your own, make sure that gets into the company via some sort of owner contribution versus slapping it on the books. So create that, you don't want to pierce that corporate veil more or less. So
we're all passionate about what we do. And so anytime you guys have any questions at all, whether, it's about inventory, it's about receivables, it's about this R&D tax credit that John is an expert on, I'm not, please reach out to any of us. I think everyone on this call that I know has a lot of business experience and has been through a lot, and together we'll figure it out, but it is going to take all of us.
Thanks for joining us on It Takes a Village, hosted by Alicia Webb. If you liked what you heard today and want to hear more, follow us on social media at Village Bank Online on Facebook and Instagram, and Village Banking on Twitter.